After marching higher for nearly 8 years, the Chicago commercial real estate market is shifting from go-go to slow-go. Vacancies in local office, industrial and retail buildings are rising again, and hotels are a little emptier than they were last year. A construction wave threatens to undermine the best downtown apartment market in decades. And sales of Chicago area commercial properties have dropped amid signs that prices have peaked. It's a little bit of a nervous, cautious time, I would say, says Stephen Quatso, co-founder and CEO of Pearlmark Real Estate Partners, a Chicago-based investment firm. Since bottoming out in 2009, the real estate market has been on a steady upward trajectory, dearing big returns for developers and investors, especially those that built or bought early in the recovery. The local boom started in apartments. Rents at top-tier downtown buildings rose 46% between late 2009 and mid-2016, and spread to other sectors, lifting property incomes and prices. An index of Chicago area commercial property values rose 62% from 2010 to 2016, recovering almost all its steep decline after the crash. In July, the 36-story office tower at 300 S Wacker Drive sold for $155 million, up 38% from what the sellers paid for it 4 years earlier. But investors who rode the market up can't do that anymore. Many are lowering their expectations both for rent growth and prices. More buildings are sitting on the market, as buyers refuse to pay what sellers are asking. The market is showing signs of toppiness, says Spencer Levy, head of America's research for CBRE. The market is flattening, he says. It is generally true of everything, though we have seen some areas of decline. That doesn't mean a crash is coming. Commercial real estate is a notoriously cyclical business. It rarely goes sideways for an extended period, but the current market isn't displaying the excesses that typically precede a downturn. Lenders are churning out lots of loans, but they're showing more discipline than they did before the last bust. Most importantly, the key drivers of demand for space, like job growth, remain strong. There's not that euphoria out there that generally is the beginning of the end, says Michael Klein, managing principal of Glenstar Properties, a Chicago-based investment firm. This cycle feels more balanced. Still, in some places, supply and demand are out of balance. The downtown apartment market tops the list. Developers are on pace to complete 12,500 apartments in downtown Chicago in 2017, 2018 and 2019, according to Integra Realty Resources Chicago, an appraisal and consulting firm. But Integra predicts there will be demand for only 9,400 units over the period. Amid a crowded market, rents at luxury buildings have stopped rising. To attract tenants, some landlords are offering big concessions. Industrial developers have gotten a little carried away, too. With the rise of internet shopping, demand for warehouse space is soaring as e-commerce and shipping firms expand their distribution networks. The local industrial vacancy rate fell to a 16-year low of 6.6% in the first quarter, according to Colliers International. But the vacancy rate has edged up to 6.9% since then, owing to a construction wave that could add about 24 million square feet of industrial space to the Chicago market this year, potentially a record amount. Downtown demand for downtown office space is also strong, as companies expand and move their operations from the suburbs to the city. But supply is exceeding demand after the completion of two big Riverside towers, at 444 W Lake Street and 150 N Riverside Plaza, helping push up the downtown vacancy rate to 13.6% in the third quarter, from 11.3% a year earlier, according to CBRE. Several more downtown office buildings are under construction or in the works, including a 1.3 million square foot high-rise at Wacker Drive and Randolph Street. Levy of CBRE isn't worried about a glut of downtown office space, but says the extra supply could filter down through the market and pinch owners of less expensive Class B and C buildings. Broadly speaking, the U.S. commercial real estate market is decelerating rather than contracting, according to Green Street Advisors, a research firm in Newport Beach, Calif. A key metric, revenue per available square foot, which accounts for both occupancy and rent, is slowing for almost every sector, according to Green Street. Just two low productivity malls and retail power centers are declining. Retail is the weakest real estate category by far, with department store chains and other retailers closing stores and more consumers shopping online. The Chicago area retail vacancy rate hit 10.5% in the third quarter, its highest level in nearly 7 years, according to CBRE. Yet the challenges facing retail landlords have less to do with the economic cycle than the structural shifts caused by Amazon and other forces that are disrupting the sector. The cooling real estate market may be good news for investors hunting for acquisitions, especially if prices fall. Finding deals that make financial sense has become tougher as prices have climbed ever higher. With investors balking at high prices, Chicago area commercial property sales dropped to $9.8 billion in the first 8 months of the year, down 20% from a year earlier, according to Real Capital Analytics, a New York-based research firm. There's a bid-ask spread, and the question is who hasn't gotten the memo. Is it the buyer or the seller, says Pearl Marks Quatso. You have a little bit of a standoff at the moment. Owners of several big buildings, including Wolf Point West, a 509-unit apartment tower near the Merchandise Mart, have pulled them off the market, unable to find buyers at their desired price. With lenders still offering good loan terms, some landlords have just decided that they're better off refinancing their properties instead of selling. A slowing or declining market also could provide some relief to Chicago area tenants tired of being slapped with frequent rent hikes. Landlords have had the upper hand for a long time. That won't last forever.